Recession.
Recession.
A recession.
Recession.
A recession is 2 consecutive quarters of declining economic growth, which is usually measured by gross domestic product or GDP. Basically, there's an imbalance in supply and demand, and the economy contracts, people will stop spending as much. When people stop spending as much, businesses have less money for production or employment, so they'll tend to start laying off workers. When that happens, unemployment rises, upwards of 10% at times, and that tends to affect people's income. When people's income decreases, they can tend to start defaulting on their mortgages, lose their homes, foreclose, and even go into bankruptcy. Generally speaking, according to the National Bureau of Economic Research, the demographics that are most hurt by recessions tend to be minorities, men, people with highly cyclical jobs, those in lower income brackets, and people with less education. There are a lot of different things that can cause a recession, but some of the big ones tend to be things like high inflation, high interest rates, low business and consumer confidence, things like trade wars, and an inverted yield curve, which basically means that long-term treasury bills and bonds have a lower yield than short-term ones. It's hard to prevent a recession mainly because it's hard to know exactly what's going to cause it, or even if we're already in it. But there are a couple things that the government can do to kind of try to reverse course. For example, the government uses things like monetary and fiscal policy or stimulus spending. Additionally, the Federal Reserve can cut interest rates to encourage consumer spending. The last time the US was in recession was in 2008, which is also known as the Great Recession. It was actually the worst economic downturn since the Great Depression in the 1920s and 30s. Some of the big causes of it include things like the subprime mortgage crisis, the housing bubble burst, lax banking and lending regulations, and lack of oversight over financial institutions. Americans collectively lost trillions of dollars of net worth, they lost over 8 million jobs, and the poverty level increased about 3%. The Great Recession was a global economic meltdown that had some pretty unprecedented effects. However, the current economy is actually stronger in a lot of different ways, more so than it was before 2008. For example, unemployment is actually pretty low, and consumer spending and confidence are historically high. Generally speaking, recessions are pretty much always a bad thing, but there are some positive things that can come out of it. For example, the biggest thing that can come out of a recession is a balance in inflation, which means you'll get a bigger bang for your buck. However, it's important to note that recessions are part of the normal business and economic cycle, and they're typically short-lived.